So far, what we discussed how to calculate rental income from Schedule E. What form we used the form number 103. Now, we will discuss or we will review and we will update our LOS with whatever the income we have calculated in 1038 form number, right? That is for specifically for rental income, right? Rental income and this form number 1038 you can easily find in any random explorer. Just go to Google or any other explorer, just type the Fannie Mae form number 1038 and you will have this form number and you can use this form to calculate the income. However, that has been already discussed, right? And we saw how to calculate income from this. Now what we are going to do, update all the rental income or loss in our LOS system, in our loan origination system. You can call it LMS, loan management system, or loan origination system. We will update everything there. What we did so far, we have calculated income from our Schedule E Part 1 for all these three properties like A, B, C, all three properties. Here is the income and expenses written for each property. What we did, we took our sheet one, that was 1038 form number. We updated all, we have three properties, so we updated all three properties addresses here. We have mentioned the number of total month here. Now it becomes the automated form, right? Whatever the income or rent received, we updated in the first line and then we updated all the expenses downward and we have now the monthly qualifying rental income. But now as we will be learning how to update this profit and loss from these rent from each rental property in the LOS. So let's go to our LOS and we will update it there, right? This is our three properties. Let's go to LOS system now. Here is our LOS system and here is our REO. In every LOS you will have similar button. This button could be at the top, could be at the left, right, or on the right as. So let's click on the real estate. Right now, once we click on this screen, this similar screen maybe with a different color is going to appear on your in your LOS. Now when if you are working in live underwriting, obviously this screen is going to remain blank, but if you are working in the closed loans, this will be already filled. You just need to cross check the data, but for that you need to know what need to be checked. Now we will go through the scratch and we will add our first real estate property. Remember, every property that borrower is going to retain. I have one property, I will retain it. I'm purchasing one more. My subject property is a purchase case and I already have a property. So that property information always need to be added in the REO section. Remember that, right? Now we will update the data for this property. Let's assume it's a single family residence, or we can cross check it the information from here. A123 on more, right? What is the A type of properties? One means single family and other two properties are two means multi-family residence. You can see here, right? So first property single family residence, borrower is going to retain. Yes, borrower is going to retain. Other could be pending sale or sold, right? What is occupancy? Borrower, how borrower is occupying this property? Is this primary residence? No, because these properties are appearing in the Schedule E Part 1. That means all these properties borrower has received rent, right? So these are investment property. All three properties are investment, so take them as an investment. Is this subject? No, borrower is not. We have already checked that borrower is not applying loan on this property, so it is not subject. Is this current property? No, this is not the current property because we know borrower is living on his primary residence, right? So it is an investment, so how it could be current? Now next is the market value. For market value, where we need to go? Okay, market value we can find from the REO section of the 1003, right? Let's see our 1003. This is our 1003 and section 3, financial information of real estate properties information. So 123 property number. How much is the property value? 200,000, right? So we will update 200,000 here. This is the property value, 200,000, right? Now mortgage lien. Do we have mortgage? How we will find it whether there is a mortgage or the best document according to our scenario is going to be Schedule E. So first A property, Here is the A column. We will go to the mortgage. Line number 12. Mortgage interest paid to bank. Nothing. Blank. Blank means if there is no mortgage exist on this property, that means property is free and clear. The another document, right? What is that document to check? Do we remember that document? What document do we see to cross verify whether there is a mortgage or not? Remember HOI, homeowner insurance, right? Yeah. So that is the one document from where we can find if there is no mortgagee clause. Obviously property will be free and clear. That could be considered. The second, if tax return is also showing property has no mortgage interest paid in the previous year, that means property is free. And so our property does not have any mortgage lien on this. So it will remain blank. Mortgage payment. So there is no mortgage payment. So the mortgage lien. So no mortgage payment. Now next is tax insurance and tax amount. On this property, their property is free and clear, but that doesn't mean there is no mortgage. There is no, there is no tax or insurance. Tax and insurance, property taxes and insurance will always remain there. Now what we need? Mortgage statement. How could we have mortgage statement? There is no loan, so no mortgage, no mortgage statement. The second, what we need tax bill and in HOI, homeowner insurance for this problem. Sometimes, there is a possibility we are working in live underwriting, and as of now we do not have insurance and tax for this problem, but we have another alternative. What is the alternative? Tax return. In the tax return, on the line number 9 we already have insurance. In the line number 16 we already have taxes for this. Very simple, right? Let's take them. So line number 9 insurance is 156 plus line number 16 taxes are plus 2834402 divided by 12 3668. That is the total of taxes and insurance, right? So that is tax return can also be utilized for this purpose. 36 I would go for 367. Now gross rent. Remember gross rent? Gross rent we need to take. From where we will take the gross rent? How much gross rent we have received? That we have already calculated, right? What was the property number? 103 onward. So this is the A property. Total gross rent is being coming to us 104. We will update that 1048, right? 1048 is the gross. Now we need to consider occupancy rate. We have already discussed while uh, calculating the rental income, what is occupancy rate, right? Vacancy factor, occupancy rate. Now here, since we are considering our gross rent from the tax return schedule E, then so we will take it 100%. If we would have taken this gross rent from the lease agreement, then tell me how much occupancy rate we are going to apply. You have to answer me. Okay. Now next is address. Add the address. From where we can add the address? Obviously we know we have updated this, right? 1 2 3. So put this document here and we'll add here 1 2 3 on 3, right? Very good. Now do we need to take any liabilities? No, there is no liability, means only there are tax, insurance and taxes. So we will save this. The first one, REO, is done. Now we have two more properties, right? You can see here we have two more property, 1 2 3. So second property, we will again take the 24 Park Terrace, right? So we will add one more RU here, that is multifamily residence. Remember, that is also retained. And investment, right? Not subject, not current. Now market value, we go to our 1003 document. There we will cross check how much is the market value. 2005. Okay, so 2400 and 2005. Okay, now mortgage lien. How much mortgage lien exist on this property? There is a mortgage, right? We have already checked. We checked here. We can even find here. They are telling Citi and Citibank account number. This mortgage payment is 114. Paid balance 128 148 124 817. Right? Okay. Also, we can see there is a mortgage exist on this property. B property, right? Properties interest in the last year has been paid as 5,000. That means mortgage exists on it. Very simple. Now we know, right? So what we need to do? Are we going to manually add here? No. Remember this. We are not going to manually update here. We will take the address first let's take the address. What is the address for second property? Here we can copy. Okay, so this is our property address. Now in the liabilities, since we already have liabilities, so our liabilities will appear from. For that we will can go back to our liabilities, right? Always remember, in REO section, liabilities are only going to appear to select if we have updated the account detail correctly in the liabilities section. Here we have how many mortgage, so there is one Citi and Citibank, that is mortgage, loan type is mortgage, and we have one Bank of America, that is also mortgage. All other are revolving, open 30 days, right? And this liability section we have already discussed. I am not going to discuss this again, right? So two mortgage accounts we have. If I would going to make it revolving, what will happen? In the REO section, only one mortgage account will appear because that is only I selected. That is why while updating the account detail, type of loan on the liability section, we need to be very careful. If it is HELOC, we need to select this HELOC. When we are gonna select it mortgage or HELOC, then only in the REO section these mortgage are going to appear here, appear in the REO section. Very important point, just wanted now. So second property, 24 Park Terrace. We know, if we are not sure which property need to be included, simply go to your 1003 and you will find here 24 Park Terrace, creditor name Citi and Citibank, right? Very easy. We will go to our LOS system and include Citi and Citibank. As soon as we are going, select this Citi and Citibank, all our liabilities will automatically get retrieved from the liabilities section. There we have already updated this, right? So now insurance and tax. If this property has insurance and taxes, how we can find mortgage statement? We will, why we need mortgage statement? Whether property is escrowed or not. If not escrowed, we will ask for the insurance and tax, right? Insurance, HOI and tax bill, that is what we require. But now again the similar scenario, let's say we have mortgage statement and that is showing this loan is not escrowed. We have already discussed in detail what are escrows, right? That includes taxes and insurance to be paid with the monthly EMIs, right? So that as we come to know that it is not escrowed, what we can do, we will ask for the tax bill and property insurance, but that is also not, as of now, not received. We are working in live underwriting, so we have alternative document. We can go to our tax return and can consider the line number 9 for insurance, right? 1667 plus line number 16 for taxes, 379 divided by 12, and monthly is going to be 455. Here we are telling this more payment is not escrowed, so taxes and insurance need to be added here. Very simple, right? Now coming to the gross rent, how much gross rent received, from where we are going to update? Very simple. Here is the amount that we have calculated for the property number 2, 1438. We will update that gross rent 138. Again, since it is a conventional loan, we are considering rent from the tax return schedule E. We will take it 100%, right? Very good. Now two properties have been updated, but we have three properties. So what we need to do, we need to see the third property. Third property is 69, right? And there is also rent received, and we have already calculated. So we are going to add one more, that is also multifamily residence. If you forgot how I am taking, you know that one means single family, two means multifamily residence, right? So here I'm going to update it. Retained, borrowed is going to retain. Then it's investment property, neither subject nor current. So we will move forward. Property address, property value, we will take from 1003. For the third property is number 69. 120,000 only the property value. So property value update 120,000. Okay, now we will not update the rest of things. That will, most of them are going to be updated automatically. Right now we will take the third property address, 6 number here updated, and now liability. Now we have only two mortgage accounts in liability section. One is already attached to the previous property, so the other automatically will get updated to the second property. Now we have already mortgage lien balance and payment updated here, right? What we need to do now, insurance and payment, similar method. I am telling you 470 is not escrowed. We need taxes and insurance, right? But we do not have taxes and insurance. So what we are going to do, we will go to our tax return and will take the tax return for taxes and insurance. Line number 91668 plus line number 16348 total divided by 429.33. There is no HOA or other, so we are good. Okay, so 494 insurance and taxes 49 point, okay, or you can make it 4229 or 430. That now next is gross rent, from where we will take the gross, same sheet that 1038. For the third property, gross rent is 131 since schedules E income 100%, right? Now we have $1,047. Those are coming from that is the cash flow coming from all three properties, right? We are gonna save this. This is how we will attach the rental income. This is how we will update the rental income. This is how we are going to update the REO section with all properties, and whatever the mortgage, let's say in our liabilities section would have shown four mortgage. There are four mortgage accounts exist. All are first mortgage, right? And we have only two property given in 1003, or only one property is given in 1003 in RU section. That means borrower has not told us the right information, right? We will go back to borrower, means we are going to add condition for the property addresses. Those need to be tied with those particular three or four mortgage. So we can condition for that, right? But if we have mortgage account, we do not have properties address, we cannot move forward. We have to have those property address. Does that make sense, right? Okay, now let's go back to our DTI. If you check now here, 1047 is the positive income, rental income that is coming from the REO section, and that becomes, like you can see, total employment income is 9500, including 1047, total becomes 10,547. Now your DTI is based on, we have already discussed this enough. I don't want to go again and again, but this is how we are going to update our REO section, and each property that borrower hold or that borrower own, we need to attach all the mortgage, right? We need to attach all the mortgage account with their respective property. Is that clear? Okay, now let's move to the next section. Okay,